Mr. Shimram Limited hold 55% shares of A1 Kubera Limited and a company incorporated in Dubai. A1 Kubera has its office in India also, and details of A1 Kubera in 24 related to fixed asset 1500 India, Dubai 650, intangible asset 225, Dubai 1075, other assets 800 in India, 1900 in Dubai. Income from trading and operations for the above figure 730 1370. Income from transaction from sales are to AU is 20 and from Dubai 40. Income from transaction from where the purchase are from AU 30 and 55. Income from transaction sales and purchase are from and to AE 45 India 80 Dubai. Interest and dividend from investment India 570, Dubai 720, number of employees 70, Dubai 90, unskilled employees out of which mentioned total employees 5 and Dubai 90, payroll expenses 940 in Dubai 1250, payroll expenses and unskilled employees 100 and Dubai 411, number of board meeting held 3 and 4. Determine the residential status of A1 Kubera, whether India or Dubai. The residential status of the foreign income is determined on the basis of the effective management (POEM), place of effective management (POEM). So the company has determined that POEM of the foreign company is the important criteria whether the company is engaged in the activities of business outside India or in India. The company shall be said to be engaged in active business outside India. Active business outside India, the passive income is not more than 50% of total income, and less than 50% of total assets situated in India. Less than 50% total number of employees are in India, are resident in India. And payroll expense incurred of such employees less than 50% total payroll expenditure. A1 Kubera shall be determined as a company engaged in active business outside India. For the previous year, BOI purchases only if they satisfy all the conditions are cumulative. All this condition on the passive income of a resident shall not be more than 50% of total income. So total income of Kubera is 17730 plus 1350 plus 560 plus 320. 29,000. Passive income of Kubera is 1000 provided to sum total of 125 crores. Income of transaction both purchase and sale are from associated in India 45 crores and 80 crores in Dubai, and 80 crores are interest and dividend, the investment 560 crores and 30 crores in Dubai, and percentage of passive income is 1050 plus 33 percentage. Total income 2950 correct. Passive income எவ்வளவு to see. Total income total assets வந்து எவ்வளோ இருக்குது 1500 plus 650 intangible asset 1075225 And 800 and 1900. Uh-huh. Zero 5 1 2 1 5 0 plus 1500 plus 225 plus 8 is 800 5 2 2525 650 107 5900 5 2 6 2625. So it was 3625. So 3625 by 625 total 3625 plus 252505 16150 2525 is 6150 quota 20%, 41.6% so less than 50%. Total number of employees வந்து 70 90 180 160 அதில் 70 60 is less than 43.75%. As in payroll expenses 9450 plus 125 2190 940 less than 40% கீழே தான் இருக்குது. டெம்பரரி எம்ப்ளாயீஸ்னு ஆட் பண்ணிடலாம். So in this case it is not by conclusion residential state of EAPO is non-resident but ordinary resident status. Income which do not form part of total income. X company engaged in developing and exporting software having two units A and B set up in special economic zone, and special unit B does not fall under section 10A of Act. And the company furnishes the following information in the third year of operation: export sales, domestic sales, duty drawback. So when unit B doesn't fall 10A கிடையாது. So the profit on the sale of import enlightenment 12.0, sanitary pay 271.60, other expenses 291.60, other operations 250.16. Knowledge information: the expense of 12 lakhs was disallowed under 43B, providing proceeds in the convertible foreign exchange received on India amounting to 520 lakhs. Export sale is 600 lakhs including 100 freight and realized 520 lakhs including amount of insurance and freight charges of 70 lakhs. Okay. Realized export sales of foreign exchange received in 590 lakhs. Expenses charged were disallowed as per the 48.3. Compute the income of X Limited. Okay. இன்கம்னா என்ன பண்ணணும்? இப்போது So export sales, domestic sale plus duty drawback its income minus profit on sale of its income, salary paid expenses, other expenses 210, net profit on the 510. The 510 we should adjust. 521 how we can adjust 521. So expense 1 lakh disallowed. So disallowed now we have to add back 12. Then one and the same procedure convertible to foreign exchange received on 31st amounting to 520 lakhs and amount to 520 lakhs 80 lakhs on the varala. Okay, and export sales 600 lakhs include freight 100 lakhs. Sale can include 100 lakhs, 100 lakhs is expenses, and realized 520 lakhs including the amount of insurance freight charges of 70 lakhs. இப்போ என்ன பண்ணுறான் இதில் பாரு ப்ராஃபிட் 520 lakhs ஆட் பண்ணியாச்சு டிஸ்அலோவிங் பை 12 lakhs பண்ணால் 263 lakhs ப்ராஃபிட்டு யூனிட் பி டிஸ்அலவன்ஸ் எவ்வளவு 60 lakhs டிஸ்அலவன்ஸ் ஸோ 61B 61 615 டிஸ்அலவன்ஸ் சவுண்ட்ஸு 60 lakhs ஆட் பேக்கு ஸோ 675 lakhs ஸோ ரெண்டுத்தையும் ஆட் பண்ணால் 263 675 831 938 lakhs profit. The exemption under 10AA. 10AA, what is the exemption is turnover of unity 600 lakhs plus 100 lakhs freight. What should be sold 100 lakhs, so 600 lakhs will be there. What is realized 520 lakhs only realized, and what is the insurance expenses 70 lakhs arana 450 lakhs 450 minus profit derived from the unit வந்து 263 lakhs. Explain the brief the treatment of the taxability of allowability under the provision of Income Tax Act 1960 for the assessment year 21 for the following whether the following transaction covered 43 for disallowance. Bank guarantee given by the company towards dispute tax liability. Okay, interest payable to GST department but not paid before filing return. For filing the reduction of any of the expenses related to 43B, the required stipulating of the section is an actual payment or not deemed payment. Furnishing the bank guarantee cannot be equated with the actual payment. The actual payment requires a money must flow from assessees to public exchanger as such as specified 43B. Therefore, reduction of expenses covered under 43B cannot be claimed merely furnishing a bank guarantee. MC Dowell Co Limited. Interest payable by GST department is part of a GST. Therefore, interest payable GST department which is not paid before due date, so filing the return of income which allows disallowance is 43B. Disallowance. R Limited is engaged in the business of manufacturing and trading activities. The company is declared a sick of industry company as this part of a reconstruction program, a part of the term loan for purchases of machinery and cash credit and interest were paid. The assessee officer was view that the waiver of the loan and interest amounting of remission and cessation of liability was taxable under section 41 of income tax. Given the following views on correct of the statement of assessing officer. அசிங் ஆஃபீஸர் சொல்கிறாருன்னா நீ லோன் கட்ட வேண்டியிருக்கு, லோனை கெட்டாமல் விட்டதுன்னா அது உனக்கு இன்கம் தானே டேக்ஸ் கட்டுங்க. இஸ் அசஷன் இஸ் கரெக்ட், எஸ் கரெக்ட் தான். The term loan of the purchase by the machinery is not a trading liability. Therefore, the waiving of the loans, no benefits or no perquisites arise on pay. Okay. In this, it's a revenue field. Therefore, the provision section 41(1) is not attracted in the case since the waiver is respect of term loan taken for the capital asset and hence cannot be treated as a remission or cessation of trading liability. Therefore, waiver of such a term loan cannot be treated as income of our limited. However, when the loan is written off as a cash credit account, the benefit of its revenue field as a money has been borrowed. The day-to-day affairs are not for the purchase of capital asset. Therefore, the return of these loans on the cash credit account, which is received for the carrying out day-to-day operations of the assessee, amounting to remission of trading liability, hence is treated as the income of the hands of R Limited in virtue of Section 41A. So, the cruise of the Delhi High Court, it is taxable. The effect of the provision of Section 41A, the attraction in the respect of the waiver of the working capital loan utilized for day-to-day business operation. Business operations since the amounting of remission of a day trading liability. However, in the case of waiver, term loan purchase for capital assets, provision of 41A was not attracted since it cannot be treated as a remission or cessation of trading liability. The waiver of interest on the term loan is not taxable under 41A since the interest due but not paid would not be allowed as a deduction in the yearly year and current year. The account of the provision of 43B, therefore, the question of taxability of interest waived does not rise. Therefore, the action of assessing officer invoking the provision of 41A in respect of waiver of cash credit is correct. However, as invoking the provision of 41A in respect of waiver of term loan and interest, assessing officers not correct. So cash credit கொடுத்ததை வந்து வே ஆஃப் பண்ணது income is correct, but term loan what is given for an interest which is not even paid is not correct. Okay. Explain in brief the treatment of the taxability or allowability under the provision of Income Tax Act 1961 for the assessment year 45 for the following is: company had an inventory of closing stock 31st March, the cost of manufacturing which was 50 lakhs and GST payable was 6 lakhs. Manufacturing since GST was eligible for reduction only on the actual payment, the company valued the closing stock as 50 lakhs only. The company paid duty amounting to 4 lakhs on such stocks on the clearance upon the date of filing the return. So fair value including. So the stock is to be valued based on fair value basis. Okay, this 56 lakhs has not been paid. Okay. But this asset cost is 50 lakhs or 56 lakhs or 54 lakhs. That's a question. But asset to be valued on fair value, 50 lakhs is fair value. But when we come into the marketplace, it will be the GST liability what we paid. It is going to be recovered from the buyers. So it is just an asset, but not to be included in the closing stock. But as on this date, the closing stock including the value of GST. Okay. My assertion is closing stock should be valued based upon the GST. The method of accounting of certain cases of Section 145A. The purpose of determining the income chargeable under Section PGBP is the following valuation rules apply. The valuation of inventory shall be made at the lower cost or a net realizable value computed as per the manner of ICDI. The valuation of purchase and sale of goods or receipt and services of inventory shall be adjusted to including the amount of any tax, duty, cess or fees payable incurred by the assessee to bring the goods or service to place of location and condition of the date of valuation. Conclusion: if the company is a regular dealer registered under GST, closing stock should be valid including the basic value of material. If the company is not registered under GST, under the composition scheme GST, the closing stock should be including the GST paid, so it cannot be claimed as input tax credit on it and a part of it purchase cost. Therefore, it assuming that the company is a regular dealer of GST, hence the value of closing stock of GST payable will not be included. Therefore, the closing stock will be valued at 50 lakhs, that is GST 6 payable. Under Section 43B, the reduction of the claim can be claimed 4 lakhs being GST paid or payable on the due date of the filing or return. Okay, value at 40 lakhs and 6 lakhs as such, and 4 lakhs if he paid can be claimed as Section 43 reduction. Okay. So, Vista Textiles has converted a meeting at top management in which management and financial manager are also present. As a tax auditor, you have also been convened to the meeting for the session relating to tax audit under 44AB income tax act. The company plans to start a subsidiary for doing chit fund business. Managing Director as a taxation manager, however, the gross receipt turnover calculated on the purpose of Section 44AB relating to the chit fund business. The taxation manager replied that it is based on the total chit collection during the year's question. Sales manager pointed out the meeting the sales return relating to sales affected March 31st has been debited to the sales account in the current year. He want to know that he would be dealt with and in the particulars of furnishing form 3CD in the current year, that is assessment year 2025. The financial manager has different views relating to the item of tax audit report assessment. Want some changes in the 34 form 3C of the year. Company has received subsidy of 10 lakhs from the state government for the year for machinery purchase in 2021, and the return on value of the block of 1st April 2024 is 12 lakhs. Chairman asked how will the subsidy be reported form 3CD. Okay, as a tax auditor, the company are required to identify various issues arising 44AB and require particular Form 3CD, suggested views relating to said issue. The various issues relating to the Form 40 Section 44AB and the requirement of particular Form 3CD as follows. The manner of computation of gross receipts turnover of the chit fund business with the total chit collection basis or any other basis. The manner of dealing with the sales return relating to the sales affecting the earlier previous year. Form 3CD or similar. Changes has been made in Form 3CA in assessment year 23-24. Consequence of different view expressed in the finance manager relating to the item tax audit report. The manner of reporting Form 3CD subsidy of 10 lakhs received from the state government during previous year in respect of machinery purchase in earlier years. On 12 lakhs. Okay. The view of tax auditor above issue based upon the guidance note. In the case of chit fund business, the commission, brokerage services or the incidental charges received from the constituent gross receipt business. Taxation manager view the gross receipt is based on the total chit collection during the year is not correct. The price of goods returned during should be deducted from the figures of the turnover when the return or from the sales need and the previous year financial year 2022 because we have received a subsidy 10 lakhs. Okay. The quality of goods returned should be reduced from the quantity of sales. The net sales quantity should be disclosed in Form 35A of the Form Class 35A of the Form 3CD. The company is trading concern and under the class 35B of 35D if the company is manufacturing concern. Further, Form B of the Annexure 1 of Form 3 figures of the gross turnover, gross receipt should be initiated. The amount is reduced from the price of the goods return. Report under 44AB Form 3CD in the case should be normally be revised. However, sometimes the tax audit may be required to be revised on the grounds such as revision on the accounts of the company after adopting annual general meeting, change in the law, for example, account of retrospective amendment, change in the introspective interpretation, for example, account of CBDT circular judgment of courts. Assuming the different view of the financial manager relating to the tax audit report and the accounts of the above recent Form 3CA can be revised. The CBDT has a view of the notification amendment rule 6G provide that the audit report furnished may be revised by the person by getting a revised report by the audit form chartered accountant duly signed and verified by the chartered accountant. If there is a payment by such person after furnishing the report, the necessity recalculating disallowance under the section 44, 40 or 43, then revised audit report shall be furnished at the end of the relevant assessment year for which the report pattern. Okay. Explanation 10, Section 43(1) provides that any portion of the cost of asset acquired with SSC has been made directly and indirectly by central or state government in this form of custody. Then such of the costs related to such subsidy shall not be included in the actual cost and asset in the SSC. Correct. அசட்லேருந்து கழிச்சு விட்ற வேண்டியதான், அதான் கரெக்டு. Subsidy coming on scope of explanation 10. Section 43(1) respect of the assets acquired by any of the earlier year as received during the year has been deducted from the returned on value of the asset in the year of receipt. Accordingly, in the case subsidy 10 lakhs has been reduced from the returned on value of 12 lakhs on 1st April 24. 93. In the Form 3CD, subsidy has been reported in the Clause 18 reduction during the year. The depreciation allowance of Clause 18 should be 2 lakhs and the return on value at the end of the year would be accordingly standard use. In addition, the capital subsidy should be disclosed and the capital received on the Clause 16G of Form 3CD. Next, in Diagnostic Center P Limited has claimed referral fee paid to doctors as revenue expenditure for the assessment year 24-25. However, TDS has been deducted in Section 144 and 94 Act as Income Tax Act 1961 for the said payment. Assessing officer proposed a disallowance of expenditure, examining the correctness of the action of the assessing officer. So for referring the diagnosis center, doctor have paid some fees that they are charging as so 194 Hutch commission income has been paid and TDS return commission. So referral fees will be professional fees or commission fees. We'll see. So section explanation 37 when any expenditure incurred by assessee for a purpose which is an offence which is prohibited by law shall be deemed to have been incurred for the purpose of business and profession, or no reduction or no allowance shall be made in respect of such expenditure as per the Indian Medical Council professional conduct and ethics code of relation to no physician shall give and solicit, receive, offer to give or solicit or receive any gift, gratuity, commission or bonus and consider return of referral any patient for medical treatment. The demand as well as a payment of a referral fee is banned in law. It is not fair to practice. It is opposed to policy public. Applying the rationale and consideration the purpose of explanation 37.1, assessee would not be entitled to deduct any of the payments under contravention of the law. Opposed to the public policy, the pernicious consequences of society as a whole. View has been upheld to Punjab and Haryana High Court, Cabs Khan Diagnostics Limited. As the action of assessing officer is disallowed the referral fee paid by X company and to doctor is correct. The fact that tax has been deducted under section 194 has no consequences. தப்பு. Examine the taxability and allowance otherwise the following cases while computing the income under the head business profit and gains of the business and profession to be declared in the return of the income for the assessment in 2025. The amount received towards the power subsidy with the stipulation that the same has been adjusted in the electric bill. So power subsidy on the electric bill பண்ணிக்காங்க. Okay, donation received by a person carrying on vocation from his follower. Okay. And profit derived by assessee as a gift. The profit derived by assessee engage in carrying the business as the dealers in share. Assessee engage in carrying the business as a dealers in shares and exchange of shares held as a stock in trade of one company with the shares of another company. So your profit derived from the assessee is in carrying on a business. Dealers in the shares and exchange of share. Okay, the amount of margin money forfeited by the company on the failure of constitution but not taking the delivery of the share purchased by such bank on its behalf. Okay, so taxability and receipt and income while computing the income under the head profit and gain of business or profession. Power subsidy received by the assessee in revenue as in nature as it is go towards a reduction in the electric bill. Therefore, subsidy is taxable as a business income. It is so held by the Supreme Court CIT Ramaraj Mai's products. Donation received by a person from his follower in the course and carrying on the vocation further and subjective in the vocation was received arising on the capacity on the vocation does not cash on recurring Supreme Court. So held the donations are taxable as in business income, and that is direct nexus between the vacation carrying on by assessee and the receipt of such donation. Okay. Difference between the price of share of the first company and the market value of share of the new company on the date at which exchange has been treated as profit derived from the dealers in share on exchange of the share held in stock and trade of the first company with the shares of new company. The normal course of business and hence the profit is taxable in the business income. It is also held by Supreme Court. Since the bank is purchasing shares on behalf of the constituents, the forfeiture of margin money from the bank from the constitution is for not paying the balance amount of the purchase price and not taking delivery of share purchased by the bank on the behalf of the normal course of business. And hence the forfeiture amount is accessed as the business income of the bank. The forfeiture amount being revenue in nature cannot be adjusted against the purchase share or purchase price of share. Supreme Court, CIT, the Lakshmi Vilas Bank. PQ is a non-banking financial company engaged in the business of leasing and hiring purchases. It is the purchase motor car from the Ramana Motors leased out the vehicles in the customs. The lease agreement in which customers attach PQR Limited the employee to depossess the vehicle. In the case of lease, committed default registration of the vehicle in the name of the lease during the period of the lease is mandatory as per the Motor Vehicle Act. PQ claim for 5 lakhs was claims rejected by the assessing officer as the ground that assessee has merely financed the purchase of the motor car and now they are the owner nor the user of the car. What is the action of the assessing of selling right? So PQ Limited the issue under consideration in the case where the depreciation was leased vehicles can be denied in the leaser on the grounds that the vehicles are registered on the name of the leasee and the leaser is not the actual user of the vehicle. So the issue comes up with the Supreme Court ICDC limited with the CIT. The court observed that the two impose a twin requirement ownership and usage of the business as a condition of the claim of depreciation. Therefore, as far as usage of the asset is concerned, the section requires that the asset must be used in the course of business. It does not mandate actual usage of the asset itself. In this case, BQR Limited did use the vehicle in the course of leasing business. Hence, the requirement of Section 32 has been fulfilled, notwithstanding in the fact of PQR Limited was not the actual user vehicle. The ICDS case Supreme Court further observed that the Motor Vehicle Act 1988 contains a deemed provision which creates a legal fiction of ownership in favor of a leasee only from the act and not on the purpose of law in general. No inference should be drawn when the direct registration certificate as the ownership of the vehicle since the registration of the name of the leasee during the period leasee is mandatory as per the Motor Vehicle Act. Therefore, as long as the leaser has a right to retain the legal title against the rest of the world, it would be the owner of the asset in the eyes of law. In this case, PQR Limited is a leaser and the exclusive owner of the vehicle as at that point of time as he is empowered to repossess the vehicle in the case of leasee committed default. The proof of ownership lies in the lease agreement itself. It clearly points favor of PQR Limited. Applying the rational Supreme Court ruling ICDS Limited case, action of assessing officer in the case of denying the depreciation PQR is not valid. G Limited is engaged in the business of growing and manufacture of tea in India. For the previous year, 31st March, it is composite business profit before allowing deduction from 33 AB was 60 lakhs rupees. Deposited the amount of 11 lakhs in the tea development accounts during the previous year and incurred business loss of 14 lakhs which is being carried forward. Now it withdraw 10 lakhs from the deposit account. It places under 6 lakhs in purchase of non-depreciable asset as per the scheme specified, and 3 lakhs in purchase of machinery installed in the office permission. 1 lakh spent in the purpose of scheme. You are required to determine the business income of the G Limited and the tax consequences that may be arising about transaction in the relevant assessment year. Now, what will be the consequence? Consequence if the asset was purchased for 6 lakh and sold for 8 lakhs in April. Computation of business income. Computation of business profit allowing deduction under the 33AB. Deduction of 33AB one is lower of the amount deposit of the development authority 11 lakh 40% of profit 24 lakhs whichever is 11 lakhs so 16 lakhs minus 11 lakhs 49 lakhs Less 60 percentage of 14 lakhs being agriculture income 29 lakhs. Business incomes is 19 lakhs 60,000. Bought forward last in the year is 14 lakhs. So business income chargeable to 5 lakhs 49,000. Okay. 10 lakhs has been amount withdrawn from the tea development has been utilized in the prescribed manner. Otherwise, the withdrawal amount would be chargeable to tax as business income. In this case, the taxability of withdrawal later utilized follow the 6 lakhs and not 6 lakhs out of the amount withdrawn from the deposit account utilized for purchase of non-depreciable asset as per the specified scheme non-taxable as per section 33ab2 no reduction shall be allowed under section 33ab since the amount is spent out of 11 lakhs deposited in T development account which is already being announced as reduction in 23. 3 lakhs being amount utilized for the purchase of the machinery to be installed in the office premises not on the premises utilized. Therefore, the amount would be deemed to be profit and gain of the business on provision 2024 23 AB for 1 lakh been spent for the purpose of scheme on the 5th April 2024 as per 33 AB. This amount will be taxable since the same is not utilized during the same previous year or be the sum amount is withdrawn from the deposit account 1 lakh. The entire amount 10 lakh forming part of 11 lakh deposited in the T development account was subject to the assessment in 2024 from the segregation of agriculture and non-agriculture income. Therefore, then any part of the amount became taxable. The agriculture and non-agriculture portion must be aggregated according to 1,60,000 being 40 percentage of 4 to 4 lakhs, 3 lakhs plus 10 lakhs. That is 1,60,000 to be taxable to tax of the business income and the balance 2,40,000 and being 60% of 40 lakhs should be of the 4 lakhs as agriculture income exempt under tax. The consequence if asset is purchased of the deposit account is sold during the previous year as per 33 ABA, if the asset has been sold before the expiry of 8 years from the end of the previous year in which acquired, then the cost of the such asset will be deemed to be profit and gain from the business and profession of the previous year in which sold asset is sold. Therefore, 6 lakhs would be deemed to be business income. However, since the full cost of the asset has been deducted in the assessment year 2024, a part of 11 lakhs being deposited in the T development account before the segregation of the agriculture income and non-agriculture income. Agriculture and non-agriculture portion of the income would be segregated in the year in which amount became taxable on account of sale of asset before the expiry of 8 years. Therefore, 3,50,000 being 60% of 60 lakh would be 100% agriculture income. By lakhs 2,40,000 being 40% of 6 lakhs would be chargeable to tax and business income. However, difference between the sale consideration and the purchase price of the asset would be charged to short-term capital gain also computed under sale consideration 8 lakhs cost of acquisition 2 lakhs. Short-term capital gain 2 lakhs.